BOB. Atul Mehra is with us, fund manager at Motilal Oswal AMC. Atul, good to have you with us here. Thanks very much. I think you guys, at least at the asset management level, are sitting on a lot of cash, a very large level of cash, at least till a few weeks back. Is that still the case, or have you deployed?
Yeah, hi Prashant. Good afternoon. So it actually depends on fund to fund. So there are some funds where we are sitting on a large amount of cash, and there are others where we are fully invested. So it's more from the perspective of an individual fund positioning than an AMC level call at this point in time.
Level, what would the cash be? Because, I mean, I'm talking about, at least in some funds, cash levels being 30-35%.
Yes, in some of the funds, cash is around closer to 30%, and in some of the funds, cash is 0.3% as well. So it's a mixed bag.
Okay. Average? You have the average number?
So average actually would depend on the AUM in aggregate. So because say some of the larger AUM funds are sitting on larger cash, so hence at the AMC level, you would find that the cash level is on the higher side. So I think on an average from that perspective, it would be around 20% or 15 to 20%, but it's an aggregation of like fully invested funds and funds sitting on a large amount of cash.
So at an AMC level, the view is that markets will come down.
So that's what I was mentioning, Prashant. So it is the way it works is it's individual fund manager call, and hence you are seeing in terms of very different cash levels across funds. So there is nothing to be read particularly about the market as a house. It is an individual fund manager call.
I have a feeling you're not bearish.
I'm fully invested.
You're not, right?
No, I'm not. So fund that I manage is sitting on less than 0.5% cash, and fully invested.
Okay, fully invested. So what have you bought? Do you want to tell us, say, in the last 2 weeks, as the earnings have been coming through, trickling in, which stocks or themes have you been purchasing?
So largely, I would say portfolios have remained more or less similar. I think overweights on financials, overweight on telecom. Slightly, we've been increasing allocations to consumers over the last, I would say, 2-3 months. So those have been the incremental allocation increases. Also, I would say in the recent times when IT has corrected, we've added to the positions because the valuations in some of the IT names are quite reasonable. And FCF yields are closer to 4 or 5% in many of the names. So those have been the more recent additions and weight increases primarily.
Okay, hi Atul, good afternoon and good to see you in. I think private banks is something that you liked and you made this point for the last many times you've spoken as well. Suddenly out of the blue, you had a Kotak Mahindra Bank's numbers that weren't too good. Now you have a PSU name that just came out of the set of numbers, not too good out there. Banks were very, very cheap. They had a good run. They actually led the market higher. But in the recent past, the last few weeks, actually, they seem to be consolidating and some of them pulling back. Is private bank still the top theme for you?
So, hi Nigel. Yes, so the private banks as a theme still looks quite good. Overall, as a basket, if you were to look at the result season so far, I think it's been largely fine in line. And although like in the recent times, they've kind of taken a breather, but if you look at the last 12 months, these have been the biggest sources of outperformance at overall market level. And some of the larger ones are still, if you were to look at it, holding out very well. So I think what has really happened in the last few weeks is, as we can see in the numbers, foreign flows have turned for the better. And hence, you will see that the more FII-dominated sectors like financials, large banks, etc., they have basically tended to outperform in this in terms of FII buying that we've been seeing. So I think that is what is getting reflected in some sense.
Atul, hi, good afternoon. Now, just going back to some of the earnings that we've got this afternoon, CG Power is one where there's a disappointment on margins. That could be maybe one-off or a company-specific issue. How are you positioned on industrials? Or basically, whether you call it capital goods, industrials, some of these stocks which are part of the manufacturing chain, given the global uncertainties?
Sure. So industrials, I am underweight in industrials as a space overall. And primarily it's to do with, I would say that in the last 3 or 4 years, you've seen a massive re-rating in some of these names. And the valuations have been on the higher side with respect to the expected growth that these companies are expected to deliver. And hence, like even though like earnings growth is higher than the market, but the stocks are not doing as well because valuation correction is something that is really playing out in some of these names. So overall, as a sector, I remain underweight in industrials, primarily led by higher valuations.
You said that you added to IT stocks in this recent round of correction as the free cash flow yields turned fairly attractive. You're talking about large cap names or some of the mid cap names where there is growth but stocks have corrected in tandem with the rest of the sector?
So it's been primarily larger names. So there, if you look at it, many of the names are now trading at like 20 times forward P multiple, and they're trading at the lower end of the 3 to 5 year valuation range. And like we've seen, I think in the past, like the sector tends to be quite in terms of impacted by global macro, what you see in terms of US news flow, etc. And they tend to give you those opportunities when the bad news is very much in the face. So hence, I think at the kind of valuation they're trading at and the cash flow like these companies deliver, and a lot of it, 90% plus is paid out as dividends or in terms of buybacks. So there is a valuation floor on some of these names. And hence, some of the larger cap IT is something that we've added to the position.
Okay, all right. Good conversation, Atul. By the way, are you worried about the India-Pakistan tensions, Atul? What's the view?
So the view is obviously it's something to be kept on the radar. We don't know the extent of in terms of escalation that could happen on this particular thing. But the base case is, in my opinion, I would say a much more measured move because in terms of, so that is the general expectation that it would be a measured move and it will not go out of hand. Yeah, let's see, fingers crossed.
Got it. Atul, thank you very much. Good speaking with you. Appreciate you joining us here, as always, on the channel. What we'll do is we'll take a quick commercial break here. As always, we'll get you what are the sort of here and now kind of ideas coming through with our technical experts. We'll also have Jay Bala join us in a bit from now. Stay with us.